Have you ever wondered how someone earning $100,000 a year can still feel financially stressed? On paper, that income sounds comfortable. It sounds like the point where money problems are supposed to disappear. Yet many people earning six figures still check their bank account before making small purchases. They still feel anxious about unexpected expenses. And at the end of the month, the savings account barely moves. So the question isn't why low-income households struggle. The real question is, why do people earning 100K still feel broke? Imagine a 29-year-old professional living in a mid-sized American or European city. Let's call him Daniel. Daniel works in tech, marketing, or finance. His salary is $100,000 a year. It sounds like success, and compared to many people it is. But income on paper isn't the same as money in your pocket. After federal, state, and payroll taxes in the United States, Daniel doesn't actually keep $100,000. He keeps closer to $70,000 to $72,000 after taxes. That's about $5,800 per month. Now let's look at where it goes. Rent for a modest apartment in a decent area, $2,200 a month. Car payment for a reasonably nice car, $550. Car insurance and fuel, $250, student loan payments, $400, groceries and food, $600, health insurance and medical costs, $300, subscriptions, phone bill, internet, $200, a few dinners out, social activities, short trips, clothing, another $700 to $900. Suddenly, the math becomes uncomfortable. Out of $5,800 monthly income, about $5,300 to $5,500 is already committed, and that's in a good month.
So where does the problem actually begin? It's not just inflation, it's not just taxes, and it's not that 100K is poor. The real issue is something economists call lifestyle anchoring. When income increases, expectations increase with it. People don't upgrade their savings rate, they upgrade their life. The nicer apartment feels reasonable. The better car feels justified. The weekend trips feel earned. Individually, each decision seems small and logical, but together, they quietly absorb the entire salary. Let's take just one example, the car. A $40,000 car financed over 6 years at typical interest rates easily becomes a $550 monthly payment. Over 6 years, that's about $39,600 in payments. Add insurance, fuel, and maintenance, and the car might actually cost $750 per month. That's $9,000 per year. Over 10 years, that's $90,000 spent on transportation, almost an entire year's salary. And this is considered normal. Humans don't judge financial decisions in absolute numbers. We judge them relative to income. When someone earning 50K sees a $550 car payment, it feels expensive. But when someone earning 100K sees the same payment, it feels manageable. The brain quietly says, I can afford this. But affordability isn't the same as sustainability, because most people don't think about the total system of expenses. They evaluate each purchase separately. Apartment, reasonable. Car, reasonable. Trips, reasonable. But when everything stacks together, the margin disappears, and that small margin is where financial freedom actually lives. Now imagine Daniel continues this lifestyle for 15 years, saving maybe $400 per month. That's about $4,800 per year. Even invested reasonably, after 15 years he might have $120,000 to $150,000 saved, which sounds like a lot, until you realize that by age 45, many financially secure households are aiming for $500K to $1 million in invested assets. The difference isn't income, it's financial structure. People who quietly build wealth don't necessarily earn dramatically more. They simply treat income differently. Instead of asking, what lifestyle can this salary support, they ask, what percentage of this income can remain untouched? They design their life around that number first. Housing decisions become smaller. Cars become tools, not identity signals. Lifestyle upgrades happen slowly, not because they lack ambition, but because they understand something most people discover too late. The real power of income is not spending ability, it's investment capacity. So when someone earning 100K says they feel broke, they're not necessarily exaggerating. They're often experiencing the quiet pressure of a system where normal life absorbs nearly everything. Higher income doesn't automatically create financial stability. Only intentional financial structure does. And once you see that clearly, the conversation about money changes, not dramatically, but permanently. If you enjoy calm, rational breakdowns of how money actually works in everyday life, consider subscribing to the channel, because understanding money isn't about getting rich, it's about seeing the system clearly.